Welcome back, beautiful people. It's Joe, aka the Nomad Investor, where dividends, freedom anywhere is the goal. And today we are back with another portfolio update where we're going to be discussing some potential changes to the positions that I'm looking to get into, as well as some news and even what's going on currently with Cloudflare. Okay, so let's dive right in. We are at 1,027 subscribers and we have 39 videos on the channel. I'm currently filming the 40th video, also the 38th portfolio update. If you are new here and you haven't already, please smash that subscribe button. That would help me stay motivated to continue making videos like these. And most importantly for everyone, please smash that like button. It helps with the YouTube algorithm and helps other people find my channel. As always, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Now, as usual, I like to share my game plan and goal for growing my personal small portfolio from $0 to $1,000 per month in dividend income. I have two sources of income. One is remote work income. The other is business income. Remote work stable. Business income fluctuates up and down depending on the seasonality of things. And I have committed to contributing anywhere from $300 all the way up to $1,000 plus per month into my Robinhood taxable brokerage. And I'm treating this brokerage like a business with the goal of aiming for 30% plus high yield. And the way that I aim to achieve that is through investing into high yield income ETFs, such as these. But honestly, I need to revise this and share with you guys some more, but you guys get the point. And then I have committed to having anywhere from a max of 5 to 7 positions in my portfolio because of the size and also the kinds of exposure that I want. But I'll basically be alternating between anchors and satellite ETFs. This is part of the core satellite investing strategy. You guys can check out Eugen Vasquez's channel if you want to get a little bit more of a, I think it's a pretty good explanation of it, or you can do your own research on Google or what have you and just go that route. That being said, I will be reinvesting the weekly or monthly dividends through manually dripping versus automatically dripping. So basically, I'll be stacking the dividends to purchase whenever the market is down. Also, I'll be doing limit orders versus market orders. And the whole reason for that is because when you do a market order, more often than not, you're going to be filling at a price that is higher or above the current market, the current share price of the ETF or the stock or whatever you're investing into is at. Versus if you do a limit order, you control the maximum price that you want to pay, and you can even get a better deal sometimes. That's the whole intention of why I'm doing manual drip. Also, these ETFs are very different. You can have automatic drip set on in moments like this when most of the time people are in positions and it is dropping below, or it's pulling back below their average cost per share. At that point, who cares? Yeah, automatically drip it in. You're going to be set. But I personally still think it's better to manual drip even in those situations because, again, you're not controlling the average cost of your purchase. Anyways, drip plus always compounding is the portfolio growth strategy, and I will basically be rinse and repeating this until my account hits $1,000 a month in dividend income. Now, again, disclaimer, none of this is financial advice. This is strictly for entertainment purposes only. I am just some random dude on the internet. Don't follow me, don't copy trade me, don't any of that. I am just sharing this so you guys can see how I perform on my journey. So far, I have tremendously failed because I sold at a loss recently. I sold my entire portfolio at a $1,100 loss. It was around like 15.33 or 34%, somewhere like that. But yeah, don't follow me, don't copy me. I hope you guys get entertained out of this or at least learn maybe something from this. Now, these are my dividend income milestones for those of you who aren't aware while I grow my small portfolio. This is so I can celebrate the small wins leading up to the bigger goal along the way. Now, previously, I have achieved the first and second goal. However, with me selling off my portfolio recently, I am not sure where we're going to be standing for this month. It might be possible that we're able to reset and get back to just the first goal or just end up only sticking with the second goal. I am not sure. We'll see. But I will update these once I am actually invested back into positions. I am still waiting. There's a lot of uncertainty, and I have considered only investing into one position so far, which I'll share with you guys soon. But you guys can pause this if you want to see all the milestones leading up to the big one. And last but definitely not least, if you guys watched my previous video, I go into a little bit more depth and detail of my high yield income stability strategy. I call this the HISS strategy, and I'm focusing on two key elements in the strategy: income and stability. These are my allocations. There's going to be 30% allocations into more stable income ETFs, such as, but not limited to, KQQQ, QDTE, and etc. Then there's going to be a 30% allocation into high yield income ETFs, such as Chippy. That's my personal one of choice, and I may potentially also throw in KYLD into there. Then there will be a 10% allocation into more leveraged high yield income ETFs. These are like HOW, WPay, NVDW, PLTW, NVII, which I'll talk about in a bit, HOII, PLTI, that kind of stuff, right? And then the last 10% will be part of my mystery allocation. So I put in parentheses, high risk, high reward, question mark, because I may do something very degenerate with that last 10%, something that just doesn't make any sense. It might just be like completely ridiculous or ludicrous. So we'll see, but I plan on sharing with you guys whenever I figure out what my mystery allocation will be, but this will probably be further down the road. I first need to contribute towards these main allocations right here. Now, real quick, I wanted to hop into my Dividend Nomad sheet. Specifically, this is my allocation or contribution calculator. As you guys can see, not much has changed, but these are the positions that I am looking to potentially get into. The only ones that I am certain of that I will be purchasing are these three right now. I am still waiting on WPay, PLTW, NVDW, and HOW. I am pretty much bullish on any Robinhood ETF that is from a quality hedge fund, especially with Nvidia as well and PLTW. In fact, actually with Nvidia, I was in a pretty good spot with my position. However, with earnings coming up, I needed to sell off personally, and I don't want to buy until afterwards because I personally think it's already priced in, but we'll see. And then PLTW, that was something that I just started new, but I just needed a clean slate. I needed to restart things and go back into the bat cave and determine what my new strategy would be, which I have here now. So these are the allocations that I mentioned. So 10%, 10%, 10%, and 10%. And then Chippy is a 30%, and then QDTE is a 20%. And then we have the last one, which is KQQQ at a 10% as well. And then I put in a formula to kind of determine if I took this amount and I divided it by its current share price, this is roughly how much shares that would equate to with my allocation amount of this, which I could enter here to change at any time. That is what I'm looking to acquire in shares with just strictly cash. This doesn't include my margin if I decide to use that, which I'm going to be taking it way easier than before because we're at the risk of there continuing to be a little bit more of a pullback. And especially when you're in a little bit more of these high yield income plays, they tend to drop significantly more than their underlyings do, let alone the whole stock market. So that's just something to keep in mind. But I think QDTE, KQQQ are probably the safest plays in my portfolio. Chippy would probably be the next uprunner. And then after that, these are all high risk. I still haven't invested into anything yet. I have $5,530.27 in cash. My margin total is $7,607.29. At any point in time, I can use this. However, it's currently not used at all. And then my total buying power with all that combined is $13,145.56. Now, I wanted to quickly share something. So I am considering not doing some Roundhill funds this time around. And the reason why is because I have been looking into RexShares, and I think I shared with you guys even one of my previous videos. I don't know, maybe it's like 5 or 6 videos ago, where RexShares announced that they were coming out with a leveraged Robinhood ETF, where I think it's like anywhere from 1.05x to 1.5x leverage. But the cool part is it has an options component to it. So you kind of get that nice little aspect to it. Now, I'm not really sure the specificity of it all or the strategy entirely. That's just briefly what I remember. But I have been looking into the performance of these versus, Robinhoods, for instance. And, I will say, like, for instance, for Nvidia, this is RexShares NVII, which for the 3 months is only down 9.43%, versus if we go to NVDW, for the 3 months, it's down 12.96%, so pretty much 13%. So as you can see, it didn't get affected or impacted as hard as NVDW did. And to me, that's very interesting. This is probably one of the best examples because this one has been out a lot longer than some of the other ones. So PLTI and HOII, those came out, I believe, this month. So yeah, this one came out November 4th. And then HOII also came out November 4th. versus NVII has been out since May of 2028, or May of 2025, so May of this year. NVDW is obviously 1.2x exposure, and then this one, again, it does fluctuate, so it says aiming for 105% to 150% of NVIDIA's daily share price performance, okay? It says that the fund is actively managed using both standardized exchange-traded and flex options collateralized by U.S. Treasuries. So that's just something to keep in mind, okay, guys? But I have been looking into these, and I am considering if this might be more of my safer leverage play. I don't know. You guys tell me. I'd love to hear your thoughts, your feedback, whatever regarding this. So obviously, you guys know I'm pretty bullish on Robinhood. I am also bullish on Nvidia, and I'm pretty bullish on Palantir. Mostly those two because they're AI plays. And then Robinhood, I just love Robinhood. They have really changed the game in the industry, and yeah, I've been using it for so long. Aside from that, this is the position that I'm looking to potentially get into today, which is KQQQ. It's actually been doing fairly well. I did miss out on another opportunity yesterday, guys, because I didn't end up putting in a limit order, and I keep missing out on that. But I think maybe today I'm going to wait it out a bit, and I'm probably going to start a very small position, if this will load, in KQQQ. And then I am keeping an eye on QDTE. I also would like to get into this position. I may possibly wait to see tomorrow, maybe. Obviously, for the week, you can see it's down 3.74%, but that's okay with me. Again, I won't be going all in on this position, so I basically won't be buying all 32 shares right off the bat. I'm going to be slowly DCAing into it, slowly buying into it, increasing my share price, especially as we have this dip. But I'm going to take my time with it. Real quick, I wanted to hop into my old sheet where I still have my old positions exactly where I left them at. And as you can see, it only gets worse, guys. I would be down 15.29% on my HOW right now. For WP, I'd be down 8.93% just in market return. For NVDW, I'd be down 1.22%. For KQQQ, it'd be down 0% and again, this is like the data from the last market close. I'd be down 6.18% for PLTW, but again, that one doesn't really matter so much. And you can see my total return percentage has decreased for HOW and WPay. It would be down 8.35% for HOW and 4.94% for WPay. With NVIDIA or NVDW, I'd still be up 2.70%, okay? If you guys aren't already, make sure to follow me on X. My goal is to get to 100 followers before the end of this month. And I usually post my updates, whether I buy something, whether I sell something, if there is a distribution for a fund that I like, any news on other funds that I'm researching or interested in, and my opinions and etc. on anything related to the markets, really. So yeah, you guys can follow me at I'm Nomad Investor. Again, that's at I'm Nomad Investor. So luckily, guys, before the Cloudflare situation happened today, I was able to actually get all my tabs of things that I wanted to cover into here. So first we got from Richie B, Wanna Be Fresh. He says, BTC looks like it really wants to crack below 90K. Selling pressure hasn't let up. Liquidations are still rolling in, and this doesn't feel like the final flush yet. If you're anywhere near a margin call, this might be the time to trim and give yourself a safer buffer. As bad as it's been, I think the bleeding can get uglier before it gets better. And then it says, also, I think Nvidia might turn into a sell the news event, even if they absolutely smash earnings. So that's strictly his opinion. We'll see how this plays out at the end of the day. But yeah, I mean, I've been keeping an eye on my Bitcoin holdings and everything, and honestly, I'm not surprised with the movement of Bitcoin right now, especially with the current state of things in the world. So I think it just creates more buying opportunities. I'm buying more Bitcoin. For me, that's personally one of my only investments that I will keep buying no matter what. And I'm not going to go too much detail into it on here, but let's just say I've been investing into Bitcoin since 2017, okay? 2016, 2017, right around there. I know for a fact these are just opportunities to keep buying, keep increasing the amount of Satoshis that you have, and what have you. Next, we got this post from High Yield Hustle. It says, ditch the 4% rule in the 401k. Cash flow shaves decades off your retirement plan while being more capital efficient. And then it goes into this, which I'll cover here. It says, you don't need millions in a 401k to retire. Here's how to retire on dividends alone without ever touching your retirement account. Now, again, this is his post, his opinion. This is not financial advice. This is just an X post that I'm covering, okay? It says the hands-off high-yield strategy that beats the 4% rule. So the 4% rule is $20K a year on $500,000. And then the high-yield strategy is $96,000 plus a year on $500K. And then right here, he's listed BTCI, blocks, QQQI, SPI, GPIQ, GPIX, TDVI. So that's pretty cool to see, actually. He said the old model, work 40 years, save in a 401k, sell investments piece by piece when you retire. The flaw, you're slowly draining your nest egg. There's a better way. Live off the cash flow, not the principal. Dividend plus income ETFs are built for this. Some pay 27 to 100% annual yield, meaning 100,000 invested could generate 27,000 to 100,000 per year in passive income. That's retirement money without ever touching the account balance. Oftentimes, higher yields above 30% you will require some entry timing and strategic reinvestment. To me, that effort is very worth it, but there are plenty of hands-off options as well. And then they list these ones, which I mentioned earlier, I think, blocks, BTCI, BCCC, SPYI, QQQI, and TDVI. 500K alone can generate a six-figure salary. The best part with the funds I laid out, your capital would have appreciated as well. Why this works? You're not forced to sell assets in down markets. Dividends equals steady cash flow stream. Add funds that provide income and upside. Forget draining your 401k. Build a dividend machine that pays you for life. Retirement isn't about age, it's about cash flow. That's a pretty cool approach. I like that he shared this. He didn't really get super specific, but this is just something that I thought was cool. I've heard a lot in the FIRE community, specifically about the 4% rule. I think there's only a few people that I personally have encountered who are all about the FIRE community who have talked about this. But yeah, this is a really cool thing to consider. Now, moving on, we've got RexShares post, and this is also what reminded me about those positions from RexShares, the NVII, the HOII, the PLTI, that kind of stuff. So it says distribution news for Rex growth and income ETF holders. Pay date 11/19/2025. So Rex NVII is going to be paying out 33 cents a share. Tesla TSII is going to be paying out this much, and I'm just going to kind of cover the ones that I'm interested in. TSII 53 cents a share. HOII 12 cents a share. PLTI 10 cents a share, and mind you, PLTI and HOI, they're brand new, so I think that could be contributing towards this. Plus, obviously, they're launching at probably one of the, best time, I guess, technically, if you're going to buy at a discount, but worst time in terms of like the market and what it's been doing. Next, this is another post by Richie B, and there's a comment that he is quoting. It says, everything is essentially screaming recession. The only thing driving both economic growth data and the indices are AI stock, and that's going to grind to a halt really quick once the negative news outpaces intra-AI bubble spending. We're in a recession, probably a severe one. Now, Richie B's response to this is, he said, been getting this type of comment a lot. I've been through real recessions, bubbles, you know what, etc. Here's how I see it respectfully. I get where this is coming from, but this feels more like a doom and gloom take than an objective read on the actual data. Markets always look bad if you remove the strongest performers. That's been true every cycle for the last 15 years. FANG, cloud, mobile, EVs, now AI. That's just how index weighting works. As for everything screaming recession, that doesn't really match the fundamentals right now. GDP is still positive, unemployment is still low, earnings are still stable, consumer spending hasn't collapsed, the credit spreads aren't blowing out. Could things slow down? Of course, that's normal. But we aren't in a severe recession today. I actually agree with this. I know sometimes I use very extreme language because I'm talking about my specific portfolio and the position that I am into, but I mentioned this the other day. When you're in leverage positions, a little movement in the NASDAQ, in the S&P 500, like being down like -1% or -2%, that is super big, for leverage positions. So that's the reason why sometimes, like, you might hear me say that, but in reality, no, the market's actually in a really healthy spot, I would say. It's just in a current pullback. It's in current correction right now. The AI comment also feels premature. Enterprise adoption is still early, chip demand is still ramping, and hyperscalers are increasing spend, not pulling back. I'm not saying everything is perfect. It's been brutal 4 weeks and sentiment is shaken. but calling for a severe recession right now doesn't align with the data the market reacts to. I respect the caution, but I prefer sticking to the actual indicators instead of assuming the worst case scenario every time the market dips. Just my 2 cents. Richie B's kind of been in the space for quite some time. He's someone that I personally like to follow and read his sentiment and thoughts a lot, as well as his opinion. But this is really interesting to take. I also share a similar sentiment regarding the AI bubble in terms of I think it's just FUD right now. That's really what it comes down to. And I think that's kind of an opportunity to start like positioning myself into acquiring more of these assets. But at the end of the day, who knows what's going to happen, right? Next, I have this pretty cool post from the Patriotic Ape on X. It says, just throwing some knowledge out there. So it's showing like bull markets and bear markets over time. So for bull markets, seems like the average bull period is 6 years and 10 months. And the average bear period is 1 year and 3 months. So that's just something to keep in mind. I know there's a lot of different perceptions on bull markets and bear markets, and something I've kind of been learning about the traditional stock market, because my background is in crypto, just for clarification. It often is relatively simple to kind of get an understanding of things. You just kind of got to look backwards. For crypto, it's still fairly new. And even though we have like these fundamentals and technicals that we like have typically relied on, like the halvenings of Bitcoin and a few more things as well that I'm not going to really touch on. But I'm still learning a lot about the stock market and the patterns it follows and how to distinguish between a correction / pullback and a bear market. Last but definitely not least, we're going to be hopping straight into the futures on Yahoo Finance. So S&P is down 0.44%. The Dow is down 0.72%. NASDAQ down 0.51%. Russell down 0.58%. The VIX is up 19.62% and is currently sitting at 23.72. And gold is down 0.86%. That's kind of what things are looking like. And then this was posted 2 hours ago from Reuters. It says, Nvidia looks set for $320 billion price swing after earnings. So it says options show the chipmaker could book its largest post-earnings move ever as investors seek signals on the AI boom. And then US stock futures fall as market braces for Nvidia test. So that's pretty cool. And then stocks face a sell signal as cash holdings decline. So we've got a few different headlines here, which are, I think, kind of sharing at least like the pre-market sentiment. Of course, things could always change. It just really depends on what news is released and at what time. Obviously, we have about like 14 minutes until the market opens, so that'll be very telling. But depending on how things are looking, I may make a move on submitting a limit order for my KQQQ position, guys. So I'll keep you guys updated on X regarding that whenever X comes back. And yeah, I mean, that's real quick. Cloudflare is down. And I'm not sure why, but let's take a look. So according to this, it says, Cloudflare glitch shuts down the web, exposes why DPIN is inevitable. It says a sweeping Cloudflare outage is causing widespread failures across the internet, taking down platforms including X, ChatGPT, YouTube, and Zoom. Various multiplayer games were also affected in one of the most disruptive infrastructure incidents of the year. The Cloudflare meltdown. Why half the internet just went dark. Cloudflare confirmed Tuesday that it is aware of and investigating an issue which potentially impacts multiple customers. It says the company initially reported progress towards recovery, but soon reverted to stating that it is still investigating the root cause. What users are seeing. Across affected sites, visitors encountered Cloudflare-generated errors such as 500 internal server errors. Please unblock challenges.cloudflare.com to proceed. Sorry you have been blocked. And API and dashboard failures. In many cases, the warnings implied security threats or access blocks, but they are simply the result of Cloudflare's system failing. Outage Tracker Down Detector, which normally provides real-time visibility into disruptions, was itself taken down. Oof, that's rough. Leaving users unable to check what was failing or where. When the site briefly loaded, it showed a massive surge in outage reports across multiple major platforms. A global internet bottleneck. Cloudflare powers core infrastructure for thousands of companies, from cybersecurity layers to traffic routing. This makes it one of the most critical backbone providers on the modern web. The outage follows last month's AWS incident, highlighting the fragility of centralized internet infrastructure. Cloudflare has scheduled maintenance today for its Santiago SCL data center, although it is not yet confirmed whether this played a role. Platforms impacted so far are X and Twitter, ChatGPT, YouTube, Zoom, Letterboxd, gaming servers reliant on Cloudflare APIs, and numerous smaller sites with Cloudflare protection enabled. Some users also reported other Google services loading intermittently. So one thing that kind of sucks is for today's video, I actually wanted to pull up stock analysis and run a comparison between NVII and NVDW and basically RexShares leveraged funds versus Roundhill's leveraged funds. But unfortunately, that's actually down too. So I can't access it, which just is awful. But it is what it is, guys. Anyways, guys, I hope you enjoyed today's video. If you guys haven't already, please smash that subscribe button. And most importantly, smash that like button. It does help with the channel growing. It does help with the YouTube algorithm. And it helps keep me motivated to continue making videos like these. I know I just kind of covered news mostly and not too much excitement in terms of me investing into a new position just yet. I am taking a breather here and just being very, very patient. I'm just doing what I personally think is best at the moment. But pretty soon here, I think I will make my first position. So if you guys want to figure out when that is, you guys can follow me on X, or you'll see in my next update whether I have a new position or not. But that being said, if you guys enjoyed today's video, if you could drop a comment down below letting me know any suggestions, comments, questions, feedback, or anything, that would be great. I'm going to be taking some time to go over comments from the last video and respond back to you guys, as well as just hear some of your feedback and stuff. But until next time, guys, peace.